The stock market is not gambling. When most beginners hear stock market, they think risk, loss, gambling. But the stock market is not a casino. It's a place where ordinary people become part owners of real companies. You don't need to be rich. You don't need insider tips. You just need basic understanding and patience. Let's break it down, step by step. Part 1. What is the stock market? The stock market is a marketplace where shares of companies are bought and sold. When you buy a stock, you're not betting. You're owning a small piece of a business like Apple, Reliance, Tata, Infosys. If the company grows, your ownership becomes more valuable. That's it. Simple.
Part 2. Why do companies sell shares? Companies need money to expand, build factories, create new products, pay off debt. Instead of borrowing, they sell ownership to the public. In return, investors get a chance to grow wealth, dividends or profit sharing, and long-term value appreciation. It's a win-win relationship.
Part 3. How do investors make money? There are two main ways. Price growth. Buy a stock at 100 rupees. Sell it later at 200 rupees. Your profit equals 100 rupees. Dividends. Some companies pay regular profits to shareholders. Smart investors focus on long-term growth, not daily price movements.
Part 4. Is the stock market risky? Yes, but not understanding it is riskier. Risk comes from no research, emotional decisions, short-term thinking. The stock market rewards patience, discipline, knowledge. Time reduces risk. Emotion